Hello traders, good morning, evening, happy Tuesday. I normally say happy Monday, but this week we are meeting up on Tuesday and beginning our week after a long weekend. So happy week to everyone. How are you guys? And how was your weekend? I'm sorry this started later today. Not sure what was wrong, but GoToWebinar refused to upload the software. It was scrolling over and over saying verifying the meeting ID and nothing happened. So I'm glad it does right now. It works and we're here. So once again, wonderful week, everyone, and happy trading. Well, thank you. Mine was great. The weekend was awesome. Well, we went to the north of Canada somewhere. I don't know even where. North into Kawarta, some cottage places. No idea. Anyway, it was awesome. It was awesome. Thank you for asking, guys. So, welcome to the new names here, Catherine. Welcome on board. And hi to everyone else who just joined. Can see a few more new names with us here today. So welcome on board, guys. Quick reminder. Let me just find that link. Where is our link to the report? Last report. Where is our last report? Here. You should see that now. All right, here we go. So just quick, what is going on when you joined? You got a welcome email first of all, so just follow up with the email, please. Inside the members area, you have the video tour. So please make sure to watch the video tour to learn how the members area works, what do you have and where. And this is a trading report. This is what you get after every single live trading room. Well, not right away because it takes time to create one. But this is exactly what you get. This trading report offers you this video. This is how to read and use this very report. Our idea is very simple. We prepare our trading week. We prepare our trading directions. Some pairs are very clear with the directions. Some players often offer two directions, one for short term, one for longer term, what we call the corrections availability, and whenever they are there, and we can use them and trade them. And then it's all summarized for you here on the bottom with the watch list. Okay, so you just click on any of the instruments you have and you follow up the plan we have. Okay, that's basically marking the cycles and the reasons what we have here. That's the type of the cycle. That's what we are looking to do. On some pairs, it's obvious when the long term and the short term directions are synchronized, and then we are buy or sell. And when we have both directions available, that's normally when the cycles from different time frames are not synchronized, and then one time frame acceptable for one direction, other time frame acceptable for other direction. That's what we call for both. Then you can go and trade these directions we set with your own strategies, my strategies, or any other strategies you have in your arsenal. It doesn't matter. What does matter is you define the directions, know where you're going, where you're aiming, knowing the invalidation scenarios, so you know what should happen and when in order to be able to make a trade. This is the comments. That's where we have a little bit of deeper explanation to the cycles. So what do we have, what do we accept, and from there for every instrument. Okay, on the short term we have the ideas for what we are looking to trade and how on the short term, for those of you who are trading the short term, of course. Indices, commodities, stocks when we have any, and of course the cryptocurrencies also when we have some. And this week we do have several of them already forming opportunities. So that's all. Normally our longest session is on Monday. This week, due to the long weekend and very low volumes on Monday, we meet on Tuesday, so we start up our week a bit later. Quick update: this week and the next week, basically until the 19th, I think. The live rooms will be only with me, so that's one session on day. That's until Jordan is back to the live rooms as well from his family vacation. So if you will have any questions, direct them to me, guys. I will be in the Telegram groups for you, of course. This is where the main chat goes. If you have anything private, then you can ping me on the Telegram for private chat as well. All right. So that's all. We will begin. Today we have a long session, so your patience is and focus, of course, required. We are going to cover the whole list for the week, and then we are doing the follow-up for the rest of the week. So I'm going to go over the cycles we already have, and we have a follow-up, explain them. If you have any question any time, of course, feel free to ask. And let's begin. We start with the European pairs, where we are here with the euro dollar. The idea here was and remains the same. The euro dollar is on a trend line from the very, very long term. On the weekly cycle, it has a bearish divergence for us right here. This is what we started to look at trade. So we prefer the direction for the sell, at least as a correction to this double cycle. Then we drop to the lower time frame, which is the daily, and on a daily cycle we can figure out that at the end of that move, which is a triple cycle or called a special cycle, doesn't matter, by itself, we have one false break on the top, one false break on the bottom. False break is the idea of fake breakout, right, of a specific level. So this was a fake breakout, fake breakdown, and we are moving in a range. This is exactly what accepts the range for us. So weekly, as at the end of a double cycle, weekly is in a range, which is a corrective cycle by itself. We prefer to sell rallies, right? So on the, from the higher place of the range. But if the euro dollar refuses to break through the range, because in order to be able to do the weekly correction, it has to break the range in order to gain the momentum. If it refuses to do so and turns around, that might be a hint that we are going for one more push to the upside, which for longer view can also offer us, according to the double cycle from the weekly, can also offer us the zone of 130 plus. Yeah, I know it sounds very, very far away from now. We still, even if we go high, we still have the 61.8 barrier here. So that's why the bearish direction is stronger pressure than anything bullish at this time being on a very, very current period. So for us, sell rallies is the best plan to do. In order to be able to join the weekly and the daily directions, we will be looking to trade with the 4-hour and the 1-hour chart combinations, right? So that means we are for 2 waves up or top of the range sells, or bearish hidden divergence when it gives us the ongoing trend. Now here we have to be careful because there is no ongoing trend yet. They is stuck in the range, right? So we have to be very careful with the setups coming from the euro dollar, and remember, it's best to trade on that situations with lower risk. Very simple. Kostas, thank you for the reminder. That's true. This week is a non-farm payrolls week. By saying that, it's meaning that we should remember that on very high importance events, such as non-farm payrolls, such as FOMC events, such as some very special speeches, the market, it tends to be in more tricky, let's call it this way, conditions, trading conditions. The setups might be trickier as well. So remember to confirm your rules, to make sure everything is lined up for you before you go and trade. Okay, that's the bottom line here, and the risks also suggested to be smaller. So bottom line for the euro dollar. Back to this, we are basically we prefer go with the sell direction as long as we are below the weekly top, and inside the daily range, we prefer to sell the rallies for the longer run. For the short run, we still can see the euro dollar bouncing from the bottom of the range and making pullbacks. That this is also going beautifully with the 4-hour chart double cycle creating here. So from the zones of its own cycle, zone number 1, zone number 2, we can see the euro dollar trying and bouncing back again, of course, on the short term. Okay, that's all for the euro dollar. The next pair of the euros for us is the euro versus the pound. Now with this pair, basically everything goes to the plan, and I would even say perfectly. Why? Because our goal was sell with the weekly direction, right? We were after sells, we are still after sells. That's what a triple cycle on the weekly. This is the false break and the bearish divergence. That means we are looking for the sells. Down to where? Down to the Fibonacci retraces levels, 50%. That's a long room to go. Well, at least the 38.2 should be a target. So that means there are hundreds of points waiting for us on this down move potentially. By the way, I didn't mention it before. For those who have no idea what I'm talking about, cycles, false break, what's that, right? We have the list of the webinars lined up here for you. Okay, so just click on that. It directs you directly to the right place in the media zone. Okay, and on your free time, on your comfort time, you can go and watch that. Back to the euro pound. So we are bearish for the long term. On the short term, due to the channel behavior from the previous week, we accepted the rally. So we were looking for these rallies in two waves, and this is exactly what we got. 1 and 2. We got the top here, we got the bearish divergence, so we got ourselves the continuation to the downside. So euro pound was and remains bearish. Is that a good double wave? Why not? Do you see any reason why would that be not a good double wave? There is divergence, there is double top. That's a 61.8 bounce from the first cycle zone, right? Classical, why not? Bearish divergence, weekly bearish, daily bearish, why not? Of course it is. It's a simply classical conditions which gives you the sell opportunity exactly as we have been waiting for on the previous week. It's so far it's following the plan amazingly with the short-term buys which we got, and now with the sells. So basically for euro pound we are bearish. We are looking for the sells options, which means sell rallies. Okay, so euro pound is bearish. Note that there is a chance that the euro pound will try to do something like that as well. It will not change our view anyhow. Our view remains bearish. For us, every two waves that will be created or top of the range that will be created would be just to go for sell. So sell rallies with the correct setups for that, of course, with the systems you use, with the strategies you trade, give here the sell. So euro pound, we are bearish. Euro yen. Now on this pair we split it for two, because on the long term, according to the weekly double cycle, by the way guys, if there are questions, please write down, I will answer right after that. On the euro yen, for the long term we are bearish. Why? We are looking for sells. Two waves up on the weekly cycle, bearish divergence. We are looking for 38.2, who knows, maybe even lower, right? But 38.2 is our target for the longer run. On the short run though, well, not really short run, but after weekly we have to go to the daily cycle to find our confirmations, because we want to sell the weekly. That means we need to see on a daily two waves up or range or bearish hidden divergence, and then we can go for sales. Currently on the daily chart we have only bullish divergence, right? Currently. So that means that on the short term we can still experience some kind of rallies. Yes, that could be to the range. Yes, that could be in two waves. Yes, that could be for a high to create a bearish hidden divergence. Currently, why would we guess what it will be, how it will look like when it finished, right? Right? So for us, short term, we want to see the rallies. Why? Because on the longer term, we would want to get these highs and to sell them in order to join the weekly cycle. That's all. So on the short term, we want to see the rallies. We can trade them if we have the setups. And then on the longer term, we will be looking to sell them. Okay? Now, on the 4-hour chart, we basically had first push to the upside. Now it's correcting down a bit. It can be easily formed here as a pattern of a range and make another push higher for us. The blue line represents the 4-hour chart possible ranges. This is the first false break on the daily chart, and this is where the second false break could take us up to. So targets towards the 132 plus, right? That means well, these targets are possible for us, right? According to the day. The pink one is the daily false break. This is the first false break on the daily. This could be the second false break on the daily if it's going to turn to be a range. And that means that this is the zone of our target right here, the 132 plus. Okay? So that's for the euro yen for the short term. Now, note, if this is the daily cycle, well, we can break it also in the 4-hour chart legs, but 38.2 Fibonacci retrace is exactly there. 50% is slightly higher, so we have the room for the possible rallies. We will want to sell these rallies, so by saying that means every two waves up on a daily chart or the 4-hour chart with the bearish divergence, we still will be looking to sell, but we do require to go to the top of the range or even higher in two waves, right? Catherine, how would you enter on the daily bullish divergence if you wanted to take a short-term long with any strategy you trade? This is where your strategies come inside. Okay, whatever you trade with the trendline breakouts, with false breaks, with Fibonacci retraces, with any of my systems, right? Any of the systems you use, but this is your short-term directions. For example, if you take a look, Scorpio, for example, right? We're looking for a setup to go with the Scorpio. If you have a good one, you can go and trade it. Okay, SRS, Triple B, any of them are acceptable to be traded, or your own what we call manual trading, not system rules, but manual trading. Okay. So that's for the euro yen. Short term, we still accept the buys. Long term, we are after sells. And please, guys, remember what I always say: on non-farm payrolls, the yen pairs tend. It's not a rule of a thumb or anything like that. But this is statistics. Statistics gained for many years. On non-farm payrolls, the yen pairs tend to be more bullish than they are bearish. Okay, that's again statistics. Why? No idea. That's the reality. It's like why pound creating some tops at the beginning of the year, for example. This is also statistics, right? Top or bottom that you can rely on for the next of the months of the years. There are some weird statistics happening with the pairs. Non-farm payrolls appearances to be bullish are one of them. Again, it doesn't mean that, oh, boom, we are buying whatever happens. No, but that means we have to remember that, and if you have a buy setup, it has bigger chances during these weeks on the short term than a sell. Teddy, these lines, that's basically action zones that I have with the crystal ball. It's one of the systems, and the Scorpio. So for those who have the Scorpio, it's also there. It's a built-in indicator. This one is in the crystal ball. It just play with the colors. That's all. The idea is the same. Marcus, yeah, exactly. So in other words, yen getting weaker. Okay. In other words. Okay. All right. So euro yen long term, we are after sells. Sells on a daily or the 4-hour chart, right? So we need the rallies to be on these time frames. Why? Because we want to join the weekly. So that has to be the following up on the time frames, right? We can't choose to trade the weekly cycle or the weekly direction by 50 minutes and say I want to join the weekly. No, it can't work, right? It's like saying I want to run a marathon, but from kilometer number 39. It doesn't work. You want to do that, you have to go through all the steps. So here the same idea exactly. We are going with the time frames, and according to the directions you find, these are the time frames you can work with, 1 or 2 lower. Next one on the list is the euro versus the Aussie. Now on this pair, we were, what is it? Here, we were bullish all the way to 162. 162 was reached for us right here on the previous week. Well, missed few points. We always say that Mr. Market is not Mr. Perfect. We got it right there, and this is exactly the moment where the Euro Aussie became bearish for us on the short term. This is what we were expecting to happen, basically, and this is what happens. So what is coming next? That's the question. In order to be able to answer this question, let's go back, for example, for the weekly cycle and ask ourselves, what do we have here? The answer here would be very simple. This is a false break on the top, right? This is a false break on the bottom, which makes it to be a ranging pattern right here. Okay, now we are on top of the range and building up a triple descending cycle. The bearish divergence is there and it's pretty beautiful. It's slowing down, and it doesn't matter how much we will fight it, it's slowing down, at least on the short term. In order to be able to stop and reverse the weekly cycle, there has to be 2 things on a daily or the 4-hour chart. First of all, the daily has to go with the weekly. Does the daily go with the weekly? The answer is yes. It has a cycle by itself, right? It has also this, this is the same like the weekly, right? We have everything there. So the daily goes with us. Now, what do we need to see to reverse it? False breaks and convergence. Right? False break could be horizontal, false break could be with alternative trend line. It doesn't matter how you name it. This is what we have. So we have here few attempts from the market to create for us the false breaks. Right? Did we ever get lower lows? This is the next step, and that's called the convergence or convergence principle. Did we ever have lower lows? Why do we require lower lows? In order to be able to say, okay, maybe the momentum changes. Now we have lower lows. Maybe the bears are taking the controls. Before you have that, how can you say the bears are here, right? So according to the daily cycle, we have no lower lows nowhere. It's only higher lows. Sorry for my ugly drawings. Drawings is my with a freehand pen. It's not my thing. So according to the daily, we have nothing yet in terms of lower lows. What about the 4-hour chart? We do have the false breaks. Do we have anywhere lower lows? The answer is again no. The answer is again no. Right? So what do we do in that case? The idea is very, very simple. The idea is very, very simple. That means that the long-term reversal is still not ready. So the only way to trade these cells were and remain to be cells on the short term. That was the only idea that we could use, and we still can use the short-term cells, right? Until where? Until we got lower lows, or until we get triple cycle down on the 4-hour chart, double cycle up, and a breakout. Because that 1, 2, 3, 1, 2, we call it 3 plus 2, right? In that case, that's the only way for the reversals to happen. Lower lows and convergence, or 3 plus 2 breakout. That's the only way for the reversals to happen. So the daily and the 4-hour chart do not yet offer us long-term cells. Okay? That means that the only way to work through that were and remain also on the 1-hour chart. We got here the triple cycle down, the double cycle up, and we got, well, I have to improve myself with the trend lines, and we got here the trend line with the double top, with the divergence, and we got ourselves the breakout that we wanted to see right at the beginning of the week. That's the one we have been hunting for previous week, and it was right here with the beginning of this week. Okay, so that's all. On the short term, it still remains bearish. What we have to be careful from the idea, as I said before, that the daily and the 4-hour chart still did not reverse it. That means that according to the 4-hour chart, these levels might be the levels where the pair would reverse from and go up again. Okay, so meanwhile it is bearish, it remains bearish. We do need to pay attention to these levels. Okay, that's all. So that's for the Euro Aussie. Short term still bearish, long term, well, I wouldn't say bullish now, simply because of the top of the range and the divergences from the weekly and the daily. Daily, by the way, was a idea of regular divergence turning to be a fake convergence, right? Fake money coming inside here. Regular divergence turning to be a fake divergence. We have the fake convergence, sorry. We have these big moving averages bearish divergence. So weekly and daily both hint for the reversals. We don't have signs for the long-term reversals yet. We definitely have the short-term cells. So it started for us from the previous week. It goes now and continues on the beginning of this week. Okay, Teddy, for your question, could that be head and shoulders? Let me know if you refer to this one. This one? Well, yes, it could. I'm not a big fan of such head and shoulders, but yes, it is. Technically, it is. Technically, it is. Well, I'm not a big pattern trader. It's less my style. It's good for confirmation. It's good when it fits in what I expect due to the cycles. For me, cycles that's the whole theory. It's a real money flow. When it fits, perfect. When it's not, I'm not normally wasting too much time on it. Technically, yes, it is. That's correct what you say here. it is a head and shoulders. Does that help us to trade? Well, on the short term, maybe it definitely is. How it will affect the long term, I think it's too early to say. Okay. All right, so the next one on the list, that was the Euro Aussie for us, guys. The next one on the list, also from the Euros, this is the Euro versus the Canadian, a pair that we are doing what? We are selling on the short term. Well, for the same reason, mainly, like the Euro versus the Aussie. We have a false break here on the top, right? And a false break on the bottom. So we can say that this pair is also stuck inside range. We have a double cycle here, which have been dancing around the 100 for a while. But on the same time, according to the higher time frame cycles, we also have some higher level possible on around 168 for the long and on the very long run. Okay, but we are here and now. We're not here on the future yet. This is the weekly double cycle. The daily cycle confirms its own pattern. Okay, it's by itself a double cycle. 4-hour chart suggests also a cycle by itself, and that would be a kind of a special cycle formation here. 1, big 2, and 3. The idea is that to end a long-term cycle, like a weekly, we need 2 false breaks on the daily and convergence. Do we have it? The answer is we have only 1 false break. Do we have 2 false breaks on the 4-hour chart and convergence? And the answer here is yes, because this is where the first false break comes into play. This is where the second one happens. This is where the convergence principle comes in. No, we don't have convergence by the MACD, but we do start to get the lower lows that we wanted to see. Okay, that makes the Euro versus the Canadian, at least as for now, bearish. And that means we are looking to sell this pair, sell rallies, as long as this invalidation level holds. We don't just have false breaks right now, we also have the lower lows. No, it's not a full convergence because the MACD does not help us, but we do have the lower lows. This is a sign that there is a very high probability that the bears are those who control the market currently. Okay, and the targets for such sells would be, well, first of all, according to the short-term cycle, the 4-hour chart, 38.2 is being reached right now. 50% of that would be the next one. That's a zone of 155. The 38.2 of the daily cycle is also 155, so this is kind of a magnet zone for a target. And then we have the big one, of course, and you can see by yourself that the targets according to that are suggested around the 152 down to 150 levels. So this pair is now to the bearish direction. Where from can we expect short-term pullbacks? Well, we are now dancing around the 100%. Okay, no real divergence on this place. That's what makes it very bearish. But the 155, the same zone that is using us as a target from the cycles we saw before, this is the same place that is suggested right here. So if we are approaching here, this is the place where we can start to see short-term rallies before another portion of the sells. Okay, so Euro CAD bearish. invalidation for this pair would be right here on this top. Targets, as discussed before. Okay. Questions about this one? Wonderful. Euro versus the Kiwi. We have been very neutral there for a while because of this ugliness. And now we have to pay attention to this breakout attempt. If this holds, this is a pretty nice formation for a possible continuation, I would say. Triple down, range. This triple is seen, of course, better on the 4 hour. Range corrective zone with the false break on the top, right? So there is a very high chance for the sell continuation. So what we require is the end of this day completing the breakout, and we can start looking for sells with this high as invalidation. Okay, now what could happen here with this pair? What could happen here with this pair? We had a false break on the top, two false breaks on the top, and we have one false break on the bottom. That might build it up as a range by itself. So this would be definitely the first place we should aim, right? Down to here. That's approximately the zone of 166. Okay? So that's for the Euro Kiwi. We will become bearish if we have this close, and that means we would be looking for rallies and sell. Two waves up, bearish hidden divergence, etc. Since we want to work here with the daily cycle, we need to work with the 4 hour and 1 hour as the confirmations and the entries for us. 15 minutes is not in a play before 4 hour and 1 hour. Both would give us the okay to go. By the way, according to the weekly cycle, right, we can still get this correction down, assuming if this is a triple cycle for us, this might be the beginning of the double. Okay, so that's for the Euro versus the Kiwi. We need to see the pattern broken. This would give us a moderate understanding that okay, bears might be here, and with the invalidation we would be looking for rallies and sell continuation. That's for the Euro versus the Kiwi and what will give us the okay to work with. Euro franc, I still couldn't find any good reasons to trade that. So for me, this pair is kind of neutral at this stage. We did have the false break here. We do have something that reminds a false break here. The only reason I don't really rely on that is because we do not have two candles rule in play here. So I wouldn't work with this pair still yet. There is still a pretty much good chance, I would say, we are spiking through and going closer to the same psychological, well, I would say even crazy level of 120. So we can get closer to there. So Euro franc was and remain neutral. For me, I don't see any reason to trade this one. So we are done with the euros, and it's time to move to the pound. All right. Any questions about any of these euro pairs we have been covering until now, guys? Yes or no? All right, perfect. So we move on the euro pound. We discussed about it. We covered it. Everything is covered there. All right, we continue then to the pound dollar. This is our headache, I would say. Why? Why the pound dollar is currently not acceptable for long term? And it's very important to understand, guys, because I've been asked a lot about the pound dollar. What is going to happen? What's going to happen? In order to be able to answer a correct answer, we need to ask the correct questions. According to the weekly, we might be dealing here with kind of a triple cycle, which means, in simple words, that the 50% of it are still targets. That's still a target. If we take a look on the very big cycle from the monster of monthly, then even 155 is a target, because this is a double cycle, right? So 155 is a very reasonable target for the long term. This is monthly. That's going to take years, most likely, unless some surprise. Okay, it's going to take a while. So there are still the reasons for the buys. According to this correction, what do we have here? Triple cycle up with a divergence that turns to be a fake convergence. And now we have on a daily chart double top with a bearish divergence. So that means on the short term, this is kind of a double top we have here. And there is the bearish divergence, moving averages, and the histogram. Right? There was a beautiful bullish channel, and we are bouncing from the top of it with the bullish divergence, with the bearish divergence, sorry, and with 1, 2, 3, 1, 2. 3 tight cycles down, 2 waves up. So the pound dollar has all the reasons for buys according to the higher time frame, has all the reasons for sells according to the shorter time. So what is the best way to work with something like that? Only short-term trading. Exactly. Thank you, Juan. Juan, I didn't see you here for a long time now, no? Like 2 weeks, 3 weeks, something like that, right? You've been too quiet. All right. So yeah, correctly. So pound dollar is not acceptable for the long term because of that conditions we just saw, and that means pound dollar could be acceptable only on the short term. In order to be able to trade short term the best way, the best thing to do is to spot the short term divergence or short term cycles, okay, and try to join that. That's the only thing to do. So pound dollar is for both and short term trading only. Honestly, I don't see nothing here to be called a reason to trade. If I have to bet, I think there is a good chance we are going down, but it's only the bet. Based on a feeling, nothing else. Everything could happen here technically, and this is exactly why this pair is not good for long term, only short term for both directions. That brings us to the next pair, and the next pair was the pound franc with a bullish direction controlling it still. Want to remind you that according to the weekly cycle, we still have 50% in play. That's 136. In order to be able to trade against it, we need to see the daily chart confirming the sell. And here comes my question to you guys. Do we have anything on a daily cycle confirming this sell? Yes or no? Exactly. Currently, nothing. No divergence. No 2 waves up on the current run. Nothing. If we want to deal with this cycle, let's say, then the 61.8, look where it is. Exactly where the 50% from the weekly is. Are we there? Do we have bearish divergence here? Nothing. So this pair pressure was and still remains bullish, sorry. Okay, on the short term. And why short term? Because look what the weekly and the daily starts to show us. First of all, the magnet zone. Second, the divergence on weekly developing. The potential divergence to be developed on a daily once we get here. Right? So the 136, 137 would be critical zone, but we are not there yet. So the pressure for this pair is still bullish. All right, that's all. And it doesn't matter what do we have on the 4-hour chart, because the daily has nothing for us to confirm the direction for the cells. This is, by the way, where that becomes irrelevant. The daily has no confirmations. So this is where it comes very, very, very aggressive approach. And if you want still to try and be able to sell that, you must double confirm. How? Two waves, bearish hidden divergence, right? None of them happened. It's a straight move up for a new high, which most likely going all the way to 136, maybe even slightly higher. Okay, so no changes for this pair. It is still bullish. Short term. Pound versus the yen. Now this pair also, like the pound dollar, both and short term only. Currently, this is the situation we have. Why? Because if we take a look on a previous weekly cycle that was going down, the targets are reached. If we take a look on the bullish cycle that was developing after that, target is reached. That was the double cycle, 1, 2, and the 38.2% reached. So the weekly doesn't help us. There is no cycle we can rely on. The only thing we have from the weekly is a bullish hidden divergence. This is the last divergence that we got on the weekly cycle. Okay, we're going to the daily. What do we have on daily? On a daily, currently, we have bearish divergence developing. So weekly and daily are against each other. In terms of cycles, do we have anything from the daily? The answer is no. That was a triple cycle up. 1, correction, 2, correction, 3. And the 50% of it was reached. So the daily also does not offer any cycle. And each time frame has different divergence direction. Do you see what kind of situations is better to avoid, guys? That kind of situations. When you have nothing lined up, every time frame tells you the whole different story. So what do we do in that case? Or completely not trading it, or going with the last divergence pressure. So when it's giving you a bearish sign, you are for sells. When it's giving you a bullish sign, you are looking for the buys. That's the only way to work through on such conditions. Okay, there is nothing on this pair for clear picture for buys or sell according to the higher time frames. And when the higher time frames are not lined up, when the higher time frames are those that give you the different directions, the lower time frames would be those that give you the hardest time to trade. When there is no money flow from the higher time frame, the short term trading belongs to algos, belongs to intraday nonsense, I call that. But still, because of the non-farm payrolls weak, as I always mention, the yen pairs tend to be more bullish. So I would not be surprised if the pound versus the yen would actually take us somewhere higher in this channel. Okay, and this is, by the way, the current pressure due to the bullish divergence, right? the current pressure. So that's for the pound yen. Both directions tradable for the short term only with the current bullish pressure. Pound versus the OZ. According to, well, let's take a look for a second, weekly chart here. According to the weekly cycle, our 38.2 was reached. 50% could still be in play if this is a triple descending cycle, and that takes us towards 190 zone. Still far away, right? But we do have a double cycle here on the pound dollar that does show us bearish divergence, and a daily cycle has a triple cycle by itself. 1, 2, 3, triple descending. Okay. The thing is here, where is the divergence on a daily? Do we have anything on a daily here to call a divergence, guys? Yes or no? Exactly. We don't have any divergence. So the daily is not working well with the weekly, which means we cannot look for sales on the lower time frames. So pound OZ was and still remains bullish. How do we join a weekly bullish direction? By getting two waves down on the daily cycle or a bullish hidden divergence. Because the next time frame for the weekly is the daily. So we require two waves down or a bullish divergence on a daily cycle. Then we can go daily time frame. Then we can go to lower time frames and trade only after the daily confirms it for us. Okay, that's all. 4-hour chart is irrelevant if you have no confirmation for your weekly cycle by the daily. Skip it. Or if you skip the daily and you just say, okay, weekly and 4-hour, you play aggressive. If you play aggressive, no problem. Just do extra confirmation. Double confirm yourself. If you if you use an aggressive approach, double confirm yourself. Okay? All right? That's all. So this is what we are with this pair, which means still bullish for the long term. The best way to join that is when the daily would confirm as a bullish hidden divergence. The 4-hour will most likely do this for us, where from we can start looking for possibly another push to the upside. So the daily has to give us two waves down or a bullish hidden divergence. Okay, is that extreme? Well, I don't think so. The RSI is pretty much far away. MACD, yes, it has 6 highs, but also not really complete high in all this cycle. I don't think it has too much impact on that condition. I don't think it's too much. It has too much impact. Daily has no confirmation. That's why the weekly still remains buy. If you want to skip the daily and trade this pullback that you will want to buy, no problem. As I said, just because you use aggressive approach, confirm yourself, double confirmation. And yes, we do want to see these pullbacks, right? We also had a cycle here, right? So we want to see this pullback. That's also in our plan for short term, by the way, right? We have this one that we are looking for sales, but it's not ready for here to turn that around for the long term. So these pullbacks down are only for the short term, right? According to these conditions. Where is it? Let me find it. Pound OZ here. That was our plan here, right? With the special cycle. That's a 4-hour chart special cycle. If you skip the daily confirmation, no problem. Just remember, you're working aggressive. So double confirm yourself. Okay, that's the only thing here. And when we get the bullish hidden divergence on a daily or 2 waves down, this is our time to start looking for the buys, to join the weekly journey. Okay, pound kiwi. Where is our pound kiwi? Here we are. Pound kiwi, according to the monthly cycle, has a huge. The only reason I show you the monthly cycle is to you to understand what this pair has. So this is most likely how the future looks like for this pair for the very long term, right? For the short term, on the weekly, this pair has reached 38.2 and triple ascending cycle with the bearish divergence, right? So after pullbacks, we would want to go and buy according to the very long term. In the daily cycle, what do we have? Do we have any reason for sells here? And here comes the thing. Falls back on the top, falls back on the bottom, makes it to be a range. If the weekly cycle is a forming ending cycle, then corrections are acceptable. Corrections down, right? For long term, we still want to look for buys. This is the reason why we were bullish the whole previous week, expecting it to go higher. And it did. We still want to go higher. We have no divergence against us in that place. The only issue with this pair, this range, right? That's the only issue with this pair. So that we have to remember. So what do we do in that case with the pound versus the kiwi? For the long term, we still want every 2 waves or bottom of the range, we still want to look for buys. It remains the plan. Okay. On the short term, this pair is creating us a triple cycle. That was the bigger double cycle. That there was one enter in the previous week, on the short term, which failed. On the long term, it never managed to break the trend line, which means it never managed to gain the bullish momentum. Now it's forming a triple cycle, which means the short term retraces down, become again relevant on the current conditions. That was a bullish run for a couple of weeks with the expectation to continue. Since it did not continue, it now forms here kind of a triple cycle, which means seller rallies on the short term is still an acceptable thing to do. And for the long term, our plan did not change. Bottom of the range and we are for buys, or 2 waves, 1, 2, and we are with the weekly buys. Okay, so that's all for the pound versus the kiwi. For the short term, sales are in play, are acceptable due to the current conditions coming, and for the long term, well, we'll be looking, of course, for the buys. Pound versus the Canadian. The pair was in both directions for previous week. Now it's forming triple cycle, which makes it into very high possibility for a bearish run. What do we have in terms of cycles here for the pound versus the kiwi? The 100% on this one and the 100% on the second leg, which is a daily cycle. This is our zone. The divergence here in play, and the divergence on the daily cycle is in play as well. This is a big double cycle. Each of the legs is a triple cycle by itself. You see that, guys? 1, 2, 3. 1, 2, 3. Each of the legs from the bigger double cycle, from this one, is a beautiful triple cycle by itself. That makes it very good combination. Pound kiwi becomes short term sell. Well, it becomes bearish, bottom line. Right? If we manage to get a triple cycle here, correction to the up, two waves and breakout, it becomes only bearish. So for us, the safest thing is to look and sell rallies. Okay. Now that's a good question. What do we do with the daily bullish hidden? That's right, but the weekly is against you. Weekly is bearish divergence. So you need a weekly bullish hidden if you want to trade, or daily two waves down. Currently, you have none. Not this and not this. That's what makes this pair to be in a bearish condition right now. Okay, sell rallies. What are the levels, by the way, to look for the possible rallies? Ideally, this is the triple cycle, 38 and 50. This is the last cycle, right, of the daily. So 38 and 50. This 178 approximately and 176. That's the zones to look for possible pullbacks for buys. Currently, we need the pullbacks just to sell. Okay, so that's for the pound versus the kiwi. Pound franc we discussed about, euro pound we covered before. We are done with the pounds. Any questions, guys? Perfect. Let's continue then. Our next pairs, dollar pairs, dollar versus the yen. Make it very easy. On the weekly cycle, double wave, bullish divergence. On a daily cycle, a special cycle down. Two false breaks. No higher highs yet to make it conservative, but we have all the levels and the conditions for this pair to continue higher. Dollar yen is currently bullish. Short term, yes, because the way that the weekly looks on that, there is still a good chance with this range we are going to continue lower after the rally. It's too early to call that. It's too early to decide about that. That's why current momentum short term is bullish for the dollar versus the yen. What kind of corrections can we expect to happen? According to the daily cycle, 38.2 is the level we are most likely heading if we are going to hit the double cycle. So if it's going to make this, then it's 108 up to 109.50. This is the invalidation level, okay, for this scenario. Now, since we had two false break on the bottom, we might go and get false break on the top, which will make it a range, and then we'll be looking to buy the bottom of the range. Okay, that's the only way to get the correction. Two waves up or a range. That's our possibilities. Now, since we want to join weekly pullback with the two waves and bullish divergence and daily special cycle, 4-hour and the 1-hour chart are the time frames we work with. Okay, on the 4-hour chart, we currently have no setup. There is no bullish divergence here, so 4-hour chart doesn't help us any way. On the 1-hour chart, we also have no divergence here, so this is not still nothing, doesn't confirm us a play here, and this cannot be a hidden divergence because you have lower plays before. So the 1-hour chart doesn't give you still nothing. And you know, to work with the 1-hour chart when the 4-hour chart doesn't give you a play isn't really too smart, right? So for the dollar yen, we are bullish and we are looking for the setups to buy. Currently, there are none. Not on the 4-hour, not on the 1-hour. Still nothing to do in that place. And for those who love the patterns, Teddy, so yes, this is possible inverted head and shoulders here. And for those of you who love wedges, then yes, this is a wedge. Okay, ending wedge. For those who trade the patterns. And according to the wedge, by the way, the target should be the meeting point from the last to, sorry, from the beginning point to the first corrective point. This is the place. Okay, and it's also leading us to the same places where the daily cycle corrections lead us to. Okay. Don't I consider 4-hour chart as a bullish convergence? This one? No, I don't. This is not the last low. This is an inner low. This is the last low. So this is what has to be broken. Right? That's the last low. That's the last high between the lows. That's where your false break happened. 1, 2. This is the last high between them. On here, you have also no divergence. So you can't use that anyway. Okay? So that's for the dollar versus the yen. Dollar Canadian. This pair we were on the short term bearish. We still are. There are no changes. Quick reminder, our weekly trend line, bearish, well, sorry, 2 waves bullish cycle with the bearish divergence, daily triple cycle by itself on this leg. So we currently are bearish. The targets, basically we have a magnet zone. 50% of this and 38% of this lead us to the same place here, the zone of 127-ish. So dollar CAD was and remains still bearish on the short term. And the reason for the short term is because I'm still not quite sure what the weekly will try to do. This or this. Still too early to decide something like that. I will not be surprised if option number 2 will be the case. Anyway, currently on the short term, it's still bearish, which means sell rallies still is a plan here. Daily has the lower levels as we just saw before. Dollar versus the franc. Where is our dollar franc here? Now this pair is for the long term, the weekly and the monthly. Has no bullish divergence yet created here. So that's what makes it possibly going lower. And I suspect it will. The daily cycle, though, offers us this special, which means the corrections up to 38 to 50 are in place. 38.2 was reached, 50% is almost reached. That's the zone of 0.96, which means that's the places where we should start looking for the sells. On the previous week, we got a beautiful work here. We got a beautiful move down, pull back, and another push until it finished with a bullish divergence. Now we have new highs. 50% is the place that we are heading. This is a possible false break place. The divergence is there, right? The daily divergence is there. So what we will want to see is we want to see the bounce from here, false break by ideal with the divergence. We would want to see that going below the trend line at least, or lower lows for better confirmations. And then we can start looking to sell the rallies. Meanwhile, on the current situation, dollar franc still remains acceptable for both directions with still currently bullish pressure on the very short term, but as I just showed, it's time to be careful with the zones we are approaching, also with the statistics. Okay, we are currently bullish, riding the tunnel, but we do need to pay attention to the beginning of the month. You see how critical it is, right? You can see that the 5th, 8th, and 6th are all very critical days, and we are approaching there. Now that's a very, very, very serious zone for us, where we most likely will start facing the bearish pressure. So dollar franc currently holding its short-term bullish momentum. Once it falls, breaks the trend line, completes the divergence, and at least breaking the trend line, we can then start looking for sell the rallies. Okay, Pacific pairs, Aussie versus the dollar. Now this pair was for short-term trading only, and I think it still is. The reason is that weekly doesn't have any divergence to the bullish side yet. The last divergence on the weekly was bearish with the moving averages. If this is the triple cycle from the weekly, then the 50% can still be in play, and this is 0.75 zone. So weekly, completely acceptable for both, and still mainly for the bearish. Daily does give us a triple cycle down. Daily does give us a bullish divergence. And that's where the confusion comes in. Weekly says one thing, daily says other thing. Aussie dollar still not ready for long-term conclusions and trading. So this pair only for short-term and still for both directions acceptable. Okay, or in simple word, that's not the best pair to trade currently. Aussie Kiwi, we were and we will remain bullish on this pair with one note, the invalidation level. This is our invalidation level. Okay, monthly, weekly are in range, so we are after by the bottom of the range. Daily give us the double cycle and the trend line breakout with the bullish divergence. Beautiful kicker. That's what makes it bullish. 4-hour chart offers nothing currently. Maybe it will turn to be a bullish hidden divergence. Currently it offers nothing. 1-hour chart did offer for us the breakout of the trend line, which failed and wouldn't work here. So you can see currently we have no new ideas to go and enter any new trade. This is the invalidation level. Okay, so if it crosses below that, we are on neutral, not buy, not sell, and the reason is because I don't think that the low would be much deeper. I wouldn't risk here with lows, but again, I might be wrong. That's just my view. It's not so far away. By breaking that, this is the zone, the next zone. So I don't know, risk that for a possible fast reversal. I would be neutral, waiting for the next sign for the bottom and for the long turnaround. Okay, so Aussie Kiwi still buys, even if we get new low. That means we will be looking for the buys, and I will skip consciously the possibility to get a new low. I don't see any reason to trade that when it's completely against the monthly and the weekly ranges. So for me, it will be neutral. Aussie versus the yen. Long term, we are bearish according to the weekly triple double. So we want to sell rallies. By saying that, that means we want to sell rallies, which means we want to see the rallies, right? The daily cycle gave us this opportunity. There was a false break, There is divergence. We want to see the rallies. Rallies could take us in 2 waves up. Rallies could take us into a range. Currently, the pressure on the short term is bullish. Okay? Again, it brings me back to the yen pairs. Yen pairs tend to be bullish. So up to where all this scenario, the bullish scenario, is acceptable. So first of all, the 38.2 of the last leg, which is reached. Then we have the bigger leg from the daily cycle, which is higher around the 83, 84 zone. And again, that has the room. So Aussie yen short-term bullish rallies, as long as this low holds, this is the invalidation, we can see the Aussie yen going higher. Okay, Aussie versus the franc. This is a mystery with this pair, isn't it? According to the long term, we are only after buys. Why? Because we had a beautiful channel, and this is a triple cycle. So for us, we're only after buys. Weekly does not give any bullish divergence, any cycle. Therefore, it doesn't really help us. What the weekly does have here is a possibility of a range. Falls back on the bottom, falls back on the top. Now we might be on the bottom of the ugly range. It's hard to rely on the weekly here because all that is happening, all that is inside the range of one candle. So it's really, really hard, on the border of impossible, to rely on the weekly with any way. The daily does offer the cycle level 1, 2, does offer a false break, right? And does offer kind of a triple bottom with the bullish divergence. So for me, it's enough for bullish, but I would play here with aggressive approach. Okay, again, the weekly doesn't really help us here with nothing. So it's kind of stuck in a range. Doesn't really help us too much, right? So for me, it's good enough for buys, especially when it's holding this low and not making a new low. The divergence is here. It's really a good sign for me. But I would deal with aggressive approach, which means with lower risk, looking for the buy. So this pair for me is mainly bullish, even though it's easily gonna make one more new low. I would be looking only for the buy setups due to the fact it was holding 1, 2, 3 times the same zone. It created a beautiful engulfing right on the bottom with the bullish divergence. For me, it's a good sign to start looking for the buys only. With lower risk, aggressive approach, but Aussie franc, for me, it's bullish. Merrill, CAD yen. Well, CAD yen we will discuss about, okay, in a moment. Okay, just going through the Pacifics and then the rest of the crosses. Okay, so that's for the Aussie pairs, Aussie versus the CAD. For me, it's still not clear. We are in both ranges here. 1, 2, and we are in the middle. So I don't know. I don't have any view here. Okay, so I skip the Aussie CAD. Kiwi dollar. As long as we are inside the weekly range, we are in a bearish pressure. Okay, we got this triple. It turns to be the range. Range could be a corrective cycle, so that's what makes the bearish pressure. According to the daily, when we got something weird like that, right? The idea is the same. We are looking to sell the rallies. There is a bearish channel here, bearish flag. Call it as you wish. The idea is the same. Sell the rallies. If we want to join the weekly cycle, we need the daily to be 2 waves up or bearish hidden divergence. On the current conditions, we don't have it. So daily doesn't really help us here with nothing, right? The only pressure that was there was a bullish divergence from the daily. If the daily is against the weekly, we already have a mixed match here. So we can trade aggressive approach with the weekly direction, and that means 2 waves up on the 4-hour chart and sell. That's what we got on the previous week. On this little scenario. Then again a solid bullish hidden divergence versus the weekly idea. So that's conditions. That's exactly why we got these zigzags. Okay, when you have the time frames giving you mixed signals, one up, one down, one bullish, one bearish, that's normally what you get. Up, down, up, down, up, down, up, down. Kiwi dollar is definitely not the best pair in this moment. And according to what we saw from the daily, this is more than acceptable, more than possible to get the 2 waves up from a daily and a bearish hidden divergence. So Kiwi dollar for long term is bullish. So we need to see a bearish hidden divergence on a daily or 2 waves up on a daily to go for sell. But on the short term, due to this, the way it behaved since then, false break might make it a possible ranging cycle here. The short term buys are acceptable due to this little push and the fact it is holding. So Kiwi dollar is acceptable for the second leg up or for a bearish hidden divergence, for example. On the short term, and for long term, we will be looking for sells, of course. Kiwi versus the Canadian. Weekly range and bearish hidden divergence. This is the bearish hidden divergence, which means we are after sells. Daily confirm that with a triple cycle, special cycle, doesn't matter how we name that. Bearish divergence and convergence. Classical combination which makes Kiwi CAD to be bearish. Sell the rallies. Rallies could be in 2 waves, rallies could be for bearish hidden divergence, rallies could be a range as the only options in an ongoing trend. Okay, so this plan was and remains the same exactly. Sell the rallies. Kiwi yen is in both directions with the current bullish pressure. We have 2 ranges. One of them is on the bottom. This is the small. This is the big. Okay, from the weekly cycle. We are currently on the bottom of the small with 2 waves down and with a cycle by itself on the triple 1, 2, 3 and 1, 2, 3. We cannot ask for more. This is why the Kiwi yen short term currently bullish. In order to be able to look for sells in such situation, we must get 2 waves to the upside or bearish hidden divergence somewhere on this zone in order to start looking for the sell continuation. Currently we have none. Kiwi yen remains bearish. Short-term bullish. Okay, this is what we started to follow up from the previous week, and our plan is still exactly the same. Okay, we where is that? We got the third move to the upside. This one, we got the correction, we got the continuation. So buy rallies, buy valleys, buy drops, is still the plan for the short term. Targets for that would be 38.2 of this cycle, which is 77.80 up to 78.50. And then the triple cycle from the big view up to 79.70. Okay, that's for the Kiwi yen on the short-term view. Okay, any questions about any of the Pacifics meanwhile, guys? Let me see. Kiwi franc, I have no opinion. No, that's all. That's always the Pacifics. And before I go for the last two pairs, CAD franc, CAD yen, any questions there, guys, about any of the Pacifics? Wonderful. So the next one on the list is the CAD versus the franc. Following our bullish plan, want quickly to remind you why at all we are bullish here. According to the long-term monster triple cycle and bullish divergence, we need only buys. According to the weekly, this is a bullish hidden divergence. And according to the daily, this is the 161.8 cycle, which we have been waiting for a while. It was dancing around, fighting, but at the end this bullish divergence made its job. So we are bullish as long as we have no signs against us. The last trigger was given to us right here. It's called a bullish hidden divergence with the higher time frames directions. Weekly is bullish, daily is bullish. 4-hour chart bullish hidden divergence give us the buys, and this is where we got ourselves the buy. Okay, this is the line from the 4-hour chart, right? And this is where we got ourselves the bullish divergence and the breakout. So for all those of you who asked me on the morning if it's valid or not, of course it's 100% valid. Now we have a short-term. Why it's changing the size of the pen here? 1, 2, 3. We might face a short-term top here and get short-term corrections, which will not change our plan. We are still looking for two waves down, bullish hidden divergence, to join the daily and the weekly runs. And the combinations of the time frames we are working with are the 4-hour and the 1-hour. Okay, so this is our last entry for CAD franc, which give us a very nice payout, basically, for the beginning of the week. CAD yen, this is the pair. For long term, the pair is still bearish. Basically, this one is kind of the same like the Aussie yen. 3 waves down, 1, 2, 3. A, B as the correction. As long as this top holds, we are looking to sell rallies. By saying that, that means we are looking to sell rallies, which means we require the rallies, right? We want to see the rallies. We want to see that happen. Weekly has the bounce from the low here, making it possibly to be some kind of a ranging pattern before a continuation, right? And a daily had for us a special cycle. 1, 2, 3. Bullish divergence is there in play, which means this is the invalidation for short-term buys. Buys are good to go all the way until 85 zone up to 86 zone. We do need to pay attention to the fact that this is one false break. This is a top that can make another false break, and then short-term rallies, drops, and continuation. Okay, for us, the plan for the short term wasn't remain the same. Get the pullbacks and look for buys. Okay, the plan remains exactly the same. We got a bullish hidden divergence here. No, there was no possible entry here on the 1 hour chart. It was only a straight move. It was very good for system trading, systematical trading. It was not good for like the triple B, like the SRS, like the Scorpio. It was not good at all for manual entry. For manual entry, we currently didn't have anything. And that's what we have from the side of the Forex. Commodities. Natural gas, we have this one running from 2.6 as investment, and we have this one running from the previous week of the break of the trend line for the regular trading. The plan doesn't change. Natural gas, we are looking for bullish. Oil. Now, oil is very, very tricky. From one side, it has 50% in play. Still there. 70. The magical 70. And if I have to bet, I still think we are going there. Maybe even higher with the double cycle from the monthly. We can maybe even go and test the 73. But yes, this is for long term. Okay. On the short term, though, we have a double cycle from the weekly. Short term. We have a double cycle from the weekly. Double top. Bearish divergence here. It looks simply classical to look for sales. Right? We are looking for the daily confirmation. Does the daily confirm the weekly sales? Special cycle up. Double top, bearish divergence. It looks simply classical, no? Not so? So from one side, we still have the room for 69 from 70. From the other side, since the previous week, we are bouncing from a double top, from a bearish divergence. No bullish divergence currently with us bullish hidden, right? So the oil can easily continue lower on the same time. This is again where the controversials come into play, and for the long term the oil could continue higher. For the short term it could continue lower according to this cycle. And we can see that there is currently no divergence ending on this cycle. The trend line that is connecting the bottoms goes lower, so oil on the short term could actually take us towards this area of 62.50, 62, and maybe even down to 61 before it will decide where next. So oil currently short-term trading, both directions are completely in play. The current pressure zone is still short-term bearish. Gold and silver. Stuck inside these ranges. We got a trendline breakout, immediate fly to the top of this range to the flag, which could be connected easily this way. Bouncing from the top of the flag with the bearish hidden divergence could easily take us towards the previous low. That's from one view. From the second view, according to the higher time frame cycles, we should be going towards the 50%, which is 1470 and higher. Which of them is stronger? Which of them is more realistic? We don't know. We can't know. We don't guess. We can't predict at this stage. And therefore, for gold and silver accordingly, long-term trading is not suitable in place. And it's only for the short-term trading. Silver is basically the same. The bottom of the range. And according to the cycles, we have two magnets in play. This is the one which is still fighting. This is the second. They are still reachable. They are still testable. they're still approachable. Both gold and silver have no clear directions for longer run right now, and the only way to trade these commodities is short-term trading only, where unfortunately currently both directions are completely tradable and in play. Okay, indices. We are bearish for the long term. I'll start with the DAX. Bearish for the long term all the way to the 50% of this cycle at least, which means it has like 1,000 points lower to go. On the short term, we do accept pullbacks due to the two false breaks, so we can see a little pullbacks taking place and happening. For us, the plan would remain the same. Two waves up or bearish hidden divergence on a daily time frame. We are looking for the sells. Same with UK. Sorry, that's the oil. Brent. Here we go. The UK. According to the weekly, 50% of this cycle is right here. Okay, so that's approximately 300 plus points to go. On the daily cycle, we had two waves and a bullish divergence, which means short-term retraces are acceptable. In order to be able to join the weekly direction, we require to see bearish hidden divergence on a daily or two waves up, and then we would be looking to go and continue to sell. So long-term sells, short-term retraces up are still acceptable and possible. Nasdaq might be completing a false break with the convergence here. Still a bit early, but this is the scenario it looks forming, and it might be also the possibility of the range. I don't see any reason to trade it currently. The pressure is bearish. I don't see any setup at this stage, and it's basically for both of them. That could be easily double wave pullback before continuation higher. I wouldn't rush to do with the American indices currently. Nothing. The best one to deal with from my point of view are still the DAX and the UK. Facebook, the stock that we are involved with since here, basically crashing and paying big time. We are aiming, well, our first target, this one reached, right, on previous week, just reminding you, reached, paid. Our next target would be according to the huge cycle, and it's 130 minus. So stay bearish there as well. Of course, for all those of you who are in, for those who don't, we need bearish hidden divergence in order to be able to join, or to waves pullbacks on a daily in order to join the weekly cycle. Once the daily completes its correction, 4-hour chart come in play, and then we can go and trade the 4-hour chart. There is one new stock coming in our watch list. This is the Peugeot, and the reason for that is the triple cycle from the weekly, false break, convergence, and pullback. The pullback looks good, looks promising, looks mainly correct. So the way to start looking for that for sales would be by breaking the trend line. So keep an eye on Peugeot, guys. Once it breaks the trend line, we become bearish, and we are looking to sell the rallies. Okay, Marcus, thank you very much. You have a wonderful evening. Okay, guys, so keep an eye here. We have no trigger for the sales yet. We definitely have this one for a classical watch list. And Cryptomania, another opportunity forming here false break, last trend line is breaking, the bullish divergence is in play. On the daily cycle, this is Ripple. On the 4-hour chart, the big trend line is getting broken. We start to see the higher highs forming, which means the bullish view is back. This is the invalidation. We are after buys. Two waves retrace, buys. Okay, now this is the Ripple. What happened here? The Bitcoin is doing the same exactly, holding kind of a double bottom, bullish divergence, last two waves down inside the double bottom. This is the trend line, this is the bullish divergence. It has to be broken. Once it is, we get ourselves the bullish setups, which means from this point look for pullbacks and buys with this as invalidation. Okay, but it has to break. It has to break in order to give us the okay to trade. Ethereum. Where is my Ethereum? Where it disappeared? Olena, thank you very much. You have a wonderful day. Ethereum, triple cycle down. Bullish divergence. Going to the lower time frame, 4-hour chart. Bullish divergence, bullish false break, and the last trend line being broken. So Ethereum becomes bullish with this as invalidation, which means buy retraces and breakouts. Okay, so that's Ripple, Ethereum versus the Bitcoin, which is one of my favorites, as you know, due to the daily divergences. 4-hour chart, the last trend line currently going on is this. So by breaking it, we become bullish. It's not there yet. It's coming. It's getting closer. Not there yet. Okay, so keep an eye here. Zcash, bullish divergence, might complete a false break by the end of the day. Bullish divergence, and the last trend line available for the pair is here. This is the trend line. The bullish divergence is breaking. Zcash becomes bullish with invalidation here. Okay, retraces and buys. IOTA, same story. Okay, the divergence from the daily, the false break that is forming and most likely will complete by the end of the day. Second false break, 4-hour breaking, giving us the okay, retraces and buy. And I can keep going over all of them, but it's the same. We have the Sun USD, right? Also a great low here, bullish divergence, triple cycle on the second leg, and the last trend line, of course, breaking through. So sentiment also looks very good, very promising. We have the Neo, they are all doing the same. We have the Mo Nero here, as you can see, right? The XMR sign, the bullish divergence, the trend line, they all offer the same. Choose the one or ones that you normally work with, and that's the ones to stick with. Most of them are following the setups and the behavior, the sentiment up or down currently, at least due to the market conditions, of course, right? but it doesn't make sense to overexpose everywhere. Okay, so choose the one or the ones you are working with and look for the pullbacks and the breakouts with them. Our idea with the cryptos was and remain the momentumal trading. If the momentum comes, we want to be there with the breakout. Guys, thank you very much for being here. Sorry it took so long. I wish you a wonderful week. Remember, non-farm payrolls week, risks lower, looking for the clear setups, those that don't leave us any doubts. And that's all. I'll see you in the Telegram groups. And of course, tomorrow we're back to the live rooms. But please pay attention. Tomorrow it's earlier, 9 a.m. EST time. Okay, so please keep an eye on that. On the hours, don't miss it out. And of course, everything is recorded for you guys and will be uploaded. Thank you. Have a wonderful week and evening, and enjoy. Those of you who are watching, enjoy the Champions League. That should be a wonderful game. Thanks, and see you around. Bye, guys.